welcome to another episode of YieldLab DeFi AMA session. So every Wednesday at 2 p.m. we host these live stream DeFi AMAs, and you guys can come ask any questions you want about DeFi, and we'll talk about it together. Usually every week I mint and raffle off a Galactic Quark NFT. And also we talk about strategies that are in the Neutron ecosystem and also even larger than the Neutron ecosystem. Recently we've been focusing on Bitcoin Summer, which is Neutron's campaign to bootstrap a Bitcoin finance economy here on Neutron. And there's a lot of great yields to be found with the Bitcoin asset. And so today's topics, I wanted to talk about some of the differences between Supervaults and Astroport LPs. So these are two different ways to earn on Neutron currently as a part of the Bitcoin Summer campaign. I also want to talk about Structured's maxBTC. So Structured is the provider for the token maxBTC, which is an auto-compounding Bitcoin token earning between 5 and 10% APR. And they run a strategy in the background, which is where that yield comes from. And after the October 11th flash crash, where markets dropped, up to 80%, tons of market makers got wrecked, and so Structured published a debrief on what happened to their strategy because it is hedged using a few different chains. And so there is a risk with these kind of strategies to have problems in situations like that where there's flash crashes. And so let's see how that did. And then ultimately, I published a thread a couple days ago about a few ways to earn on Bitcoin using one of the specific positions on Bitcoin Summer, which is lending wrap BTC on Mars Protocol, which is a credit protocol on Neutron. Currently getting about 12% APR for just lending wrap Bitcoin. And so we're going to go into a few different ways that you can strategize with that and see if you're interested in employing one of those strategies. All of this is strictly educational. None of it is financial advice, just some of my personal strategies, and also for us all to learn about DeFi in the process and kind of how to put these different Legos together and use it to our advantage to get some high yields on assets that we want to hold, because that's really what it's about: getting yield on assets that we want to hold. And let's build wealth slowly over time. So give me just 1 minute and I'm going to send out this link to a few different channels. And then also, if you have any questions at all, feel free to drop them in the YouTube comments or on the live stream chat on X, and I'll try and address any of those questions as we come up. Because really, first and foremost, this is an opportunity to learn about DeFi, to learn about how these different applications work, and for us to grow together. Okay, so who do we all have here in the audience? If you guys can drop something in the chat and show that you're here and around, that would be great. Marshall Brown, thanks for coming. You are probably the most dedicated student here for the DeFi classes, so thanks for showing up. Okay, so I'm going to start with here you can see in the background, this is the Neutron app, and this is where the Bitcoin Summer positions are all being displayed. Just if you have never seen the Neutron app before, here on the left-hand column, you can see your balances, different places to earn, so like Supervaults or Astroport LPs or the Bitcoin Summer positions, including lending Bitcoin, borrowing Bitcoin, and so in Earn, that's where you'll see all those options. This Bitcoin Summer tab is where we'll be spending a majority of time today, and these are all of the positions that are being incentivized with Neutron tokens over the course of the next year. Every 2 months, there is a phase, so each phase lasts 2 months long. And really, an important part of this phase is that you deposit liquidity into different positions, and then it stays there. If you withdraw your positions, then you forfeit the rewards that you had accrued on that position during the phase. So really it's about picking a strategy for the next 2 months, leaving your funds there. They're not locked, you can remove them, but like I said, they're forfeitable. And where that is described is here. In addition to the docs in the Bitcoin Summer campaign, here, this column displays the neutron rewards from Bitcoin Summer. Withdrawing before the end of the phase will forfeit neutron rewards earned during the phase. So let's connect our demo wallet, and we can see that we have, a few rewards accrued. We are lending some wrapped Bitcoin on Amber. Amber is a protocol that allows you to leverage loop yield-bearing assets to then earn even more yield without taking on more directional leverage. So you're not leveraging against USDC or a stablecoin, you're leveraging against correlated assets. It's like Bitcoin on Bitcoin. But yeah, we covered that in another episode. We're not going to get too much into that today, but I'm sure we will go back to that in the next week. So let's get into maxBTC a little bit. So Structured is a protocol that is the issuer of maxBTC, and maxBTC is a auto compounding Bitcoin token. And the target has been between 5 to 10% APY for maxBTC in Bitcoin. And so it's an auto compounding token, meaning if you hold this token for, if you have 1 Bitcoin deposited and you hold it for 1 year, then at the end of the year, you should end up with 1.05 or 1.1 Bitcoin. The maxBTC will be worth 1.1 Bitcoin if you unbond it. So that's traditionally how liquid state tokens work. And in the background, how this generates yield, because you're like 5 to 10% APY on Bitcoin, like that is awesome. Sign me up. And how much can I dump into it right now? Well, the underlying strategy is a combination of the JLP, so the counterparty liquidity pool on Jupiter. And then there's various hedge positions where what you end up with is just Bitcoin exposure. So Bitcoin exposure plus 5 to 10% yield. If you are familiar with delta neutral positions, it's essentially a delta neutral position where what you're left with is the Bitcoin exposure. And so how it has performed over the past few months, it's been live, and so this is what it looks like. If you can see on the screen, sure. The lower bound here is at 5%, and the upper bound are 10%, and so that's the target range for the performance of this asset. And yeah, you can see it's been right within bounds since it's June 25th. And so the past 4 months, the performance has been great. And here you can see the flash crash. So this downward slope here was caused, and what they outline in this article is that although the JLP token performed really well during the flash crash, because as you can assume, there were a lot of liquidations, and often liquidation funds flow back to the counterparty vaults. And so the JLP part performed really well, but there's another component of the strategy where you need to be hedged. And so these hedges are usually shorts on various perp exchanges. But if the funding rates for shorting you have to pay, then that also eats into your profits of the performance of the JLP. And so that's why we saw a bit of a drawback in the performance. They noted in this article that the cost of shorting was more expensive than the performance of the token, but all in all, the strategy performed well, and we're still well within the 5 to 10% APY range for this token. So that was really great to see them post a little debrief on how this performed. Some of these positions, like the Athena token, that's also delta neutral based, it's hedged using various protocols, and there's risk there that is involved if the different positions are not hedged properly, or we saw some nightmare cases on exchanges like Binance and Hyperliquid where people were auto deleveraged. And so if this happens, there can be potentially holes, but maxBTC performed really great here, and it shows that this is the first test that this asset has, and it passed really well. And so that's great to see. You know, if you're interested, definitely go check out their X account. It's called StructuredFi. And if you don't know what maxBTC is, there's already quite a few Medium articles about what this asset is and how to learn more about it. Also, remember, like what I said, where does the yield come from? And also, how scalable is it? This token, they say that the strategy should remain in this range of 5 to 10% APY up to $1 billion of deposits. And so really, this asset is the engine that will be driving Bitcoin Summer in the background once it's on top of the neutron incentives. And so this being yield bearing drives some things like leverage looping. And so you can deposit a yield bearing Bitcoin token, borrow a non-yield bearing Bitcoin token, and then you swap for the yield bearing token and just loop that. But in the end, your exposure is Bitcoin 1x, but you're leveraging the difference between what you're paying to borrow the token and what you're earning from this maxBTC token. And so that's what Amber is doing, and that's what this token is unlocking for the neutron ecosystem, leverage looping, and for anyone who wants to get yield on Bitcoin. And so the idea of Bitcoin finance is, how can we earn yield on Bitcoin? Everyone wants to hold Bitcoin. It just goes up. It's very stable. And, you know, a lot of people that, are in this space are long-term oriented, where they want to hold Bitcoin. And so rather than just holding it, and you can't do anything with it, rather than just holding it, you can earn yield on it. But previously, there hasn't been that many great places to earn yield on Bitcoin. You know, maybe you're lending it on Aave or something, or Morpho, and maybe you're earning 0.5%, or maybe you're borrowing against it. You can get a bit more out of it that way, but then you're taking on leverage risk, and you also have to do something with your borrowed tokens. And so you have to be very well versed in DeFi, know where to profit off of this. Whereas something like maxBTC is earning 5 to 10% APY just holding it. And on top of that, there's other incentives that you can get out of the Bitcoin Summer campaign for depositing maxBTC in various protocols. So you then increase your exposure, or increase how much yield you can get by holding just Bitcoin. Yes, by every step of these actions, you're increasing your risk. You know, just taking your Bitcoin off of mainnet is increasing your risk. Holding wrapped Bitcoin, increasing the risk. Holding maxBTC, more risk. But with more risk, you know, it's risk-adjusted returns. So assuming you're okay with slightly more risk because you want to get more yield on your Bitcoin. Almost always, you know, well, it depends how people want to manage their portfolio, but a lot of people like to keep some amount of Bitcoin on cold storage, on mainnet, and maybe they want to play around with a portion of their Bitcoin. And so this, you know, could be a great opportunity for people that are willing to play around a bit and get higher yield on a portion of their portfolio. So let me stop there, and I'll check the comments, see if anyone has any questions here from the YouTube or from the X. So thanks again for joining. Q Cult, Marshall, and Machep. I don't know how to pronounce your name, I'm sorry. But we have a great question. So is the Ethereum Vault TVL not included in the Bitcoin Summer TVL? So let's navigate over to the Bitcoin Summer campaign. Okay, here we go. So now we've connected. Yeah, it looks like we're up to about 13 million in deposits, which is a great start. And especially what I like to look at is what are the APRs as these TVLs are incoming. And so you can see that something as simple as lending your wrapped Bitcoin on Amber is still earning about 18% APR, which is insane for just lending Bitcoin. And that's at 13 million in deposits. And so even if there was another 13 million in deposits in this campaign, we would still see that sitting at around 9% APR. So really the deposits can go up 3 or 4x before we get down into like 3 and 4% range and this is just for the neutron rewards. And really the 3 and 4% range is probably the hurdle rate for most people for at what rate do they want to move their Bitcoin around. Okay, yeah, I got a little sidetracked. Let me go back. Okay, so the Ethereum vaults, if we look at the total TVL here, we see, starting from the top, about 5 million of people minting maxBTC plus, yeah, it's majority of that. And if we go here to the neutron positions, I'm going to assume that a majority, yeah, that this TVL here for holding maxBTC is also accounting for this, because this liquidity vault is just minting maxBTC. Technically, how the flow happens is, if you want to mint maxBTC, you go to this vault, which is on Ethereum, and you pass a KYC. Once you pass a KYC, you can withdraw your funds from this vault on Ethereum. So you mint it by depositing wrapped BTC on Ethereum. And then when you withdraw it, you connect a wallet for Neutron, and it bridges the funds, bridges your maxBTC into your Neutron wallet on Neutron. And so this 5.5 million looks like it's still in the minting contract, so yet to be ported over to Neutron. But I'm going to assume that it's still included in this holding maxBTC. Ultimately, this app, there's so many different, in this Neutron app, there's so many different positions that are being indexed into this information, tracking everyone's different positions across multiple protocols. Like you see here, we have the structured protocol, Amber, Supervaults for providing liquidity, Astroport, another liquidity DEX AMM, which we're going to get into in a second. And then also Mars, a credit protocol, Amber for leverage looping. And so really there's a lot of different positions being tracked here. And I should say that on November 1st, these Ethereum vaults are being deprecated. And so if you have any funds still remaining in these vaults, please withdraw them. You will not forfeit your rewards for these vaults. So let me be very clear there. Normally, the terms of these vaults are forfeitable, meaning that if you withdraw before the end of the phase, which is in 25 days, you can track the phase length here, then you would forfeit your rewards. But since these vaults are being deprecated, you are not going to forfeit these rewards. So you can go and withdraw these funds now. And what you will receive is on Neutron, for example, if you are entered into this LP or this vault, this is lending wrapped BTC on Amber and providing liquidity into the Uni BTC super vault. And so what you will receive when you withdraw from this vault is your position, which was lent on Amber, and then also a Uni BTC LP token. So, yeah, you go ahead and withdraw those, or else, come November 1st, these will be shut down, removed from the UI, and what's left will be the Neutron positions. And this will make the user flow much more intuitive, because there's just going to be one tab for people to deposit into, one tab for them to check, one tab for the total TVL, and the user flow will be much clearer. Did that answer your question? Yeah. So just to repeat it again, yeah, the TVL is combined right now, so we're at a total of 13.3 million TVL. Okay. Okay, let's check. What else do we want to talk about today? Okay, yeah, this is a good opportunity. We can talk about the difference between Astroport and Supervault LPs. And so let's jump into that. So if you come here to, okay, so say you're brand new. Excuse me, you are brand new to Neutron, you see the Bitcoin Summer campaign, you navigate to the Bitcoin Summer tab on the app and the Neutron positions, and you're like, whoa, there's a lot of different options here. I see, maybe you want to sort by TVL or APR. We can sort by APR. And you see that here are different LPs you can deposit into, maxBTC, USDC, USDC, maxBTC. And you're like, oh, this is the same LP. They're both yielding, about 70-something% APR. Yeah, so like what's your mental model for how you go and you choose between these two LPs? Let's assume that, yeah, you want maxBTC exposure. So we talked about yield bearing, auto compounding, 5 to 10% APR Bitcoin token. Sounds good. And you also are comfortable with USDC. So yeah, the risk associated with an LP paired with USDC is that there could be some impermanent loss if Bitcoin goes up or down. It makes a big move in either direction. And so, but you've decided you're okay with that risk. You're okay with if Bitcoin goes up, you'll be kind of dollar cost averaging out of Bitcoin. If Bitcoin goes down, you'll be accumulating a bit more Bitcoin. You've already accepted that, but now the difference is which protocol do I want to use to deposit into? And so the first step we can do is we can look at this tooltip. If we hover over the APR, we see that there's a 30-day APY overhold of 40%, and then there's the Bitcoin Summer Reward. So these are the neutron incentives that are collected over the course of the phase, over the course of the 2 months, and then claimable at the end of the phase. And there's also 25x structured points. So structured is the protocol that is issuing maxBTC. Okay, and let's look at the Astroport protocol pool. There's pool APY of 1.4%, so that comes from swap fees. There's Astro incentives on top of that, so those are liquid incentives from the Astroport protocol that you can claim block by block. And then there's also the 6x Bitcoin rewards, which is again 37%. So those will be the same. And then the structured points. So on the surface, they look a little similar. The incentives are coming from different places, but the APRs look similar. And so now we have to do our research. Now we have to look into what is the difference between Astroport and Supervaults in terms of the actual underlying LP structure. And so, we're gonna, and that's how we get, and so the difference is how they market make. And so Astroport pools are always designed to maintain a 50-50 balance of the two assets. And so in this case, 50% USDC on one side, 50% maxBTC on the other side. As swaps are going back between them, the pool gets slightly imbalanced, which opens up room for arbitrageurs to come in and buy or sell either asset to rebalance the pool. And so when pools become imbalanced, there's a market pressure, a market incentive to go and rebalance the pool. And so the assets are kept in 50-50. The incentives are also, slightly different because the Astro incentives are liquid and you earn them as a reward. But those can end. The Astro incentives can end. They can also, the Astro price can go up or down, so that can change in how much you are being rewarded on a block by block basis. And also the pool APY can change. If the market making strategy is performing well, then the swap APR will go up, and how many swaps will be processed will increase your fees. Whereas on Supervaults, the underlying market making strategy is different. Supervaults rely on an on-chain oracle, which allocates liquidity within the vault to the pricing of the underlying asset. So in this case, maxBTC. And so the oracle knows what the price of maxBTC is, and it will allocate liquidity concentrated around that. However, this means that the assets do not have to be in 50-50 ratio. In fact, they can be different, and when they are different, there are different fee structures that help rebalance the vault, but oftentimes it will remain slightly away from 50-50, or it can remain further from 50-50 more of the time. Strategies rely on external prices to rebalance, or external actors and market participants to rebalance the pool, but they might not return to 50-50 at the same speed. And you can also deposit into Supervaults one-sided, but you have to, when you withdraw your liquidity, it is withdrawn in a pro rata share of the current inventory. So let's look at what some of this looks like in the app rather than just talking about it. So we can look at this is Astroport, the first protocol we were talking about. Let's look at this pool, the maxBTC USDC pool. So we can see here the combined APR. The pool APY should be very similar to what we just saw on the Neutron app. The Astro rewards, yep, 33%. Okay, so let's look at it. If you click on it, it shows the liquidity over time, how much volume is being pushed through this pool, how many fees it's collected, and this I think is an important piece here, the incentive distributions. So this is where it shows the 33% in Astro that you were being rewarded with has 0.6 weeks left. So it has about half a week left, and we don't know if this will continue to be incentivized or not. And so let's keep that in mind when we're thinking about the comparison between the two LPs. Anyone permissionlessly can add incentives to this pool, but they also have a governance set up where every 2 weeks the voters of the holders of the governance token Astro vote on which pools receive incentives. So it could be that this pool is being voted on to receive incentives every week, and we could check that. So let's go down to governance and see if maxBTC USDC is going to receive emissions. Here we can search for maxBTC. Okay, great. So yeah, it looks like although the 0.6 weeks are remaining for this pool to receive Astro incentives, they will be coming again next week. Next emissions, the next 2-week period, it's basically the same. This is how many votes, 69,600, are being voted for this pool, and next week, something very similar. And so we can probably expect this APR to continue on the maxBTC USDC pool, at least for the next, the next session. And if these voters continue to vote, then the next 2 weeks as well. So that's good. That's something to keep in mind as we're looking at this Astroport pool. So the Astro incentives will continue. The Bitcoin summer will continue. The points will continue. Okay, so this pool looks relatively stable. Now let's look at the maxBTC USDC Supervault. We can go ahead and just click on it right here, and it'll bring us right to the Supervaults. We can see the performance over time with Supervaults is measured differently. Supervaults measure performance against holding spot assets in a 50-50 ratio. And so that means if you want to just hold maxBTC and hold USDC in a 50-50 spot bag, that should be your benchmark. Because if you're comfortable holding USDC, you're comfortable holding maxBTC. Is it worth it for me to be LP? Is it worth it for me to deposit into this LP and pair them together? Because that's ultimately the decision you have to make. You want to earn money on your assets, and so if I LP them, am I coming out profitable? And that's exactly what this performance over hold is supposed to indicate. And so it looks like over the past month, depositing into this vault has outperformed holding spot by about 3%. And so that's part of how they calculate this performance number, which is the 30-day APY overhold. You can scroll down and look at the statistics. We can see how the performance overhold has been working. We can see the volume that's been coming through this pool. Another difference is, we're not claiming any rewards from Supervaults other than the neutron rewards that are a part of the Bitcoin summer. The fees that are calculated by accrued by the pool from volume go directly back into your Supervault vault position. So we can see down here, this is the other thing, the pool balance. So what I was saying with the Astroport pool almost always stays right around 50-50. Maybe there's a big swap, but that swap opens up a gap for arbitragers to come in and purchase the other side. So the Astroport pools almost always are about 50-50. Supervault pools are also, kind of aiming to be 50-50, but it doesn't always work out like that way. It depends on the fees or incentives to rebalance, and also who is buying and selling these assets. And so we can see here that there's more USDC than maxBTC in the vault. And what this tooltip is telling you that a percentage of the vault inventory held in each asset. So we can see here it's 84% USDC, 16% maxBTC. The larger imbalance poses a larger inventory risk. You're like, what is inventory risk? So inventory risk means right now, if Bitcoin were to go up, this super vault would not gain as much as if it was 50-50 in ratio. It works both ways, and we can't predict it. If you think that you can predict it, and you are not happy with this current balance, then maybe it's time for you to consider withdrawing or picking a different super vault, a different market making strategy that you're more comfortable with pairing 50-50. So this number will change as people swap in and out of it. I will say that it's a little bit hard to get a hold of maxBTC right now, given that people had to KYC to mint it, and also most people are probably holding on to their maxBTC, and most people are trying to buy it, which is why this super vault has less maxBTC right now. And so probably why we saw this big outperformance of entering this super vault compared to holding spot 50-50 is because the performance of Bitcoin has come down over the past couple weeks. And since this vault had less maxBTC as inventory, the vault took a much smaller hit compared to holding. And you can see that here with the performance tab over the past month, as Bitcoin has come down, the vault has maintained relatively stable because a majority is USDC. So that's the difference. I got that question a lot in the Neutron community Telegram. What's the difference? Which one should I deposit into? And really, the decision is up to you. But we should be aware of what the differences are between the two market making strategies and pick which one is right for you. Because maybe you have different risk tolerances and different opinion on which assets you want exposure to and which method of claiming rewards that you want exposure to. So I'm going to check the chats to see if anyone has any questions about what we just went over, because I do understand that it is a bit of a different mechanism. Okay. Let's so no questions. Okay, you guys, a smart bunch. So let's go into the next topic that I wanted to talk about, which was I posted a thread about a few different specific strategies that you can employ using lending wrap Bitcoin on Mars and in conjunction with the Bitcoin Summer campaign. So let's check that out. Here is the thread. If you're curious, it's by my account, so at @fluffy_T-Rex, and it's about 5 different ways to earn yield on Bitcoin, on either Bitcoin or USDC in Neutron. And really what I should have added is almost all of these strategies start with Mars specifically and lending wrap BTC. So this is just one position on the entirety of Bitcoin Summer. This is just this position right here, lending wrap Bitcoin on Mars. And it looks like you would earn about 12.3% APR in the Neutron incentive from Bitcoin Summer, and also about 1% in just lending. So that's other people are borrowing wrap Bitcoin and they're paying you to be depositing. And so Neutron is incentivizing lending supply in Mars for wrap Bitcoin. So then that allows other people to come in and borrow Bitcoin to be deposit into the campaign, or it opens up a lot of different strategies, and so we're going to jump into some of them. Let's look at the thread. So the first one is just if you're a Bitcoin long. If you hold Bitcoin and you want to get yield on it, maybe you don't want to LP, maybe you don't want to leverage, and you're just looking, where can I park some Bitcoin and earn on it? And so one option is just to go and here's the Mars interface. You go to earn. This is the Bitcoin summer Bitcoin denomination. So it's the Eureka wrap Bitcoin. And you just go ahead here and you go lend it. I'm actually holding some Axelar wrap Bitcoin. So I'm just going to go ahead and swap for the Eureka asset right here in the Mars UI. Let's see what account I have. Okay, so yeah, so I was using this account to demo these strategies, and so we can go ahead and we can fund a new account. Let's check this one. Or no, okay. So this is like from start to finish what your process would be for using Mars. So you mint a new credit account. So here's a brand new credit account for 3425, and we fund this. And so this is bringing assets from our wallet into Mars. $40 of Axelar wrapped BTC. We're going to fund our wallet in Mars, or our credit account in Mars. Okay, but like I said, that's not the right denomination. We need the Eureka wrapped, and so we're gonna go here and sell Axelar wrapped and buy the Eureka version. Okay. And that's it. Let's go. We can look at the rate we were getting. Great, you can go here to your history and you can see, okay, swap this for that. And you can see that history up here. If you click on your address, it has all the recent transactions. Okay, now that we have the right denomination for what we'll be earning, let's go ahead and lend this. So it's actually already lent because I have up here checked that I want to be lending my assets to earn yield. And so that's it. You're done now. If you just want to lend your wrap Bitcoin and earn 12% APR on lending, you're done. And we should see it show up here in the Neutron Bitcoin Summer UI. Here we are, lending wrap Bitcoin on Mars, are $40, earning 13% APR. Simple as that. But kind of the benefit of depositing into Mars is that it allows you capacity to use the rest of the application. So maybe we want to borrow assets, or maybe we want to trade perps against our Bitcoin collateral. And all of this is happening within our credit account. So we can do a lot in a very capital efficient way using Mars. If you just wanted to lend Bitcoin, then maybe lending on Amber would have been more profitable for you because this is earning a bit more in the Neutron rewards. So if you just want to do single deposit wrap Bitcoin, these two options could be good for you. You know, they're different applications, although they're both made by Mars, and Amber are both made by the Mars contributors and by the audited contracts from Mars. Okay, so let's get back to Mars. So what is the next strategy? If you're BTC neutral. And so what this means if you're BTC neutral, I just meant like maybe you don't want exposure to Bitcoin. Like you're holding the asset, but you really want USDC exposure. You know, you don't want it if Bitcoin goes up, Bitcoin goes down. You just want really USDC exposure. And that's why I say here that really BTC neutral is kind of like a USDC deposit. At least that's how I'm describing it in this strategy. And so what that means is we're taking a delta neutral trade on using Bitcoin as our strategy token. And so that means we would have to do one additional step, which is now we're going to short Bitcoin on perpetuals. So we go up here to trade perps, Bitcoin, and we short the same amount of our Bitcoin deposit as we hold on spot. And so what this means is we have 1x spot holding our wrap Bitcoin, and we have 1x short Bitcoin. So it doesn't matter if Bitcoin goes up or down, the dollar value of our portfolio remains the same. And so that's called being delta neutral. And this only makes sense if you're profiting on either the short position or the long position. And so in this case, the funding rate is actually negative. And so if you short Bitcoin on Mars Perps, you will be paying 13% APR to the longs. And so in this case, we're actually like not making anything, because the spot side of our portfolio, the Bitcoin, the wrapped Bitcoin, is earning 13%, but the perpetual we're paying 13. And so in this case, it does not make sense to do this on Mars, given the current market for perpetuals on Bitcoin. But you can go to Hyperliquid, and I just was checking yesterday, and actually, if you're shorting Bitcoin on Hyperliquid, you are being paid 9% APR. So if that was the case, then you can add the 9% APR to your spot APR for lending Bitcoin, and you're making a profit in this case. And so, but then you're using two different products, and so you have to be very familiar with these two different platforms and manage your risk in two different places. So again, like, part of the reason why I write these threads is just so people can get thinking about how to use these assets and when. Maybe right now is not the most ideal time to open this strategy, number 2 here on the list, but let's keep it in our toolkit for later, for when it does become profitable. Then we can execute on the strategy. Okay, so that is number 2. Another way, just real quick, another way to go short on an asset is to borrow it and then sell it. So we could do the same thing here by borrowing, for example, wrap Bitcoin, the Axler wrap 1, or even the Eureka one. We could borrow this 1x to another $40 and then sell it. So that way we're short on margin rather than perps. And in this case, it would cost less to borrow and sell on margin than it would on perps. And so again, another thing to keep in our toolkit. In that way, you'd only be getting about a net 10% APR. So up to you whether that's the strategy you want. And again, the most important part of strategy number 2 is that you're net neutral to the price of Bitcoin. Moving on to number 3. So this is leveraging your long bags using spot. And so this would be, you deposit your wrap Bitcoin like we did. So now we're 1x long for Bitcoin. And now let's get another, we want to go long Bitcoin again with leverage because we think it'll go up. Maybe you think it will go up. How can we get paid even more to do that? Well, you have 2 options. You can go here to borrow and borrow USDC, and then swap that USDC for more wrap Bitcoin. So now we're leveraging our spot bag of Bitcoin. So now we can go 2 or 3x Bitcoin. And not only are we increasing our exposure to Bitcoin, but we're also increasing how much rewards we'll be earning from the Bitcoin summer campaign. And so there's a really easy way to do this. You go to Spot Advanced, and now you're saying you're selling USDC, buying wrap Bitcoin. And if you tick on this little margin button, then this does it all in one transaction. And so you can slide this. I think in the strategy I slid it to 3x leverage. And so we can slide this over. I'm looking at this leverage icon here in the credit account. You can see your health coming down as you're increasing your leverage. Okay, so like that's about right. And so now you can see here, this is what it would be like if we assign this transaction. We will be having about $112 worth of Bitcoin now. We'll have some debt denominated in USDC. Our net credit account will be paying, this APY, but we'll be earning a lot from lending the $112 worth of wrap Bitcoin in the Bitcoin summer campaign. And so this is if you're long Bitcoin, then and you want to use leverage. That's an important part. If you want to use leverage right now, then potentially this is a really good way to get paid to use long leverage. Oftentimes you need to pay to go long with leverage, but in this case, we're getting paid. That's how you do it with spot. So right now, so in this example, we were borrowing USDC, and selling it and buying more spot Bitcoin. But you can also do it using perps. You can go to the perps, and this is all done in Mars, which is like the most beautiful part of this is that your collateral is all kept in one place. Your trades are all made in one place. It's all using the same collateral, and so it's extremely capital efficient. Same thing for this perp trade. We're using our yield bearing, or like our wrap Bitcoin, which is earning in the Bitcoin summer campaign, as collateral to open this perp long. And here you go. You can go long. You can click here on the leverage. So now we're leveraging up. You can see your liquidation price here, 82,000. And in this case right now, we'd actually be paid to open the long, because remember right now the way that the open interest is, short positions are paying long positions, and so if we open a long, we'll be being paid on our perp position and also on our spot position. So just so many different ways to use Mars, and now that we know that the wrap Bitcoin lending wrap Bitcoin on Mars is being incentivized, there's like quite a few different ways we can move the puzzle around to get the yield that is really attractive for which position you want to take. Whether you want leverage, you don't want leverage, if you think Bitcoin's going up, if you think it's going down, there's different options for you, and they're all bearing bearing quite a bunch of yield because of this incentive right here. I think we just went over 4, which is how to leverage long using the perps. And then 5 is, if you want to essentially short Bitcoin, you can also do that by depositing USDC and then borrowing wrapped Bitcoin on Mars and depositing that into any of the Bitcoin summer campaign positions. So that way you'd be, your liquidation risk is because you're using USDC as collateral and borrowing Bitcoin. So if Bitcoin goes up a lot, your position is at risk of being liquidated. But assuming you put it into like a single deposit position and then wait until the end of the phase, so in 25 days, withdraw your position, and you can directly repay your position on Mars, and you just profit from the rewards that we earned in the Bitcoin summer campaign. And so I'll pause there. Those were, I think, some interesting strategies that we put together that are all surrounding this lending wrap Bitcoin on Mars. And it's always important to think about like how much capacity is there for any of these specific strategies and how long will it last. And so we know that the capacity for wrap Bitcoin on Mars is 411,000. So right now there's 56,000. So that leaves about $350,000 of deposits left, which is, a good chunk of change for people that are wanting to move around a chunk of capital. And then also the time. So the phase lasts another 25 days. So you have to commit to that length of time. And then after that, there'll be another phase with even more rewards. So the potential length of this strategy could be a very long time, up to 1 year, which is how long the campaign is running, but at a minimum for the next 25 days. And then the other strategies have a few other like specific limitations for how much liquidity you can use, such as the open interest on the perp positions. So if you go to perps, some of our strategies were either longing or shorting on perps. And so right now there's about 13K of open interest on each side, which is not a ton. So if you were to open with a 10K position, you would change the balance of this position, meaning if the skew is different between the long and the short positions, the funding rate will change. And so farming the funding rate can be, a really easy way to make profits short term, and also a good way to hedge your positions. But this funding rate changes. It's a perp exchange. On a majority of perp exchanges, the rates change very quickly, and so you would need to be aware of that. I'll stop there and check the comments again. If any of you guys found these strategies interesting, please let me know. If you entered into any of them, also definitely let me know. I'm lending wrap Bitcoin on Mars, and I'm still thinking about what strategy I want to employ after that. I think I'll potentially borrow some USDC and put that into a strategy, or what I think is a really good thing to a really like an easy way to do arbitrage on liquid stake tokens. And so if you see a specific liquid stake token that is at a discount right now, you can borrow the underlying token and then buy the depegged liquid stake token, unbond it, and then repay your loan and collect on your rewards. So that's one option if people are looking for what to do with their margin capacity. Hey, Big Data, how's it going? Okay, here is a question. Since I'm already on Mars, can I show the difference between borrowing on a credit account and receiving to your funds to your wallet? Okay. Okay, so here's a good question. Now we've funded this account. We're lending our assets. So here we have $40, which is currently earning like 12% APR in the Bitcoin Summer Campaign. It's earning about 1% APY in lending fees. And now what do we want to do if we want to borrow against this? So the strategy I was literally just talking about is if we borrow Atom, because currently the D Atom asset is slightly at a discount. And so if we borrow Atom and then use that Atom to buy D Atom and then take the D Atom over to drop and unbond it. So that would allow us to, capture the full redemption rate of D Atom, and we'll end up with more Atom than what we started. And then we would just go back to Mars and we repay our debt in Atom, and the profit that we're left with is the Atom that is excess. And so that's like our profits. It takes about 22 days to complete an unbonding ARB. But in this case, it's actually perfect timing because the Bitcoin Summer Campaign, the first phase, ends in about 25 days. And so we have to leave our Bitcoin in lending on Mars for 25 days anyway. And so this could be a perfect opportunity to do like one cycle and come back. We claim our Bitcoin Summer rewards and we claim our unstaking rewards. And so how you would start that is you start that by lending your wrapped Bitcoin here, and then you go to borrow, and let's say we want to borrow Atom to complete the arbitrage by buying discounted D Atom. And so how Mars credit accounts work, remember we deposited about $40 of Bitcoin, right? But this is allowing us to borrow like $118 worth of Atom, which is crazy. That's, four times what our collateral is. But that's because how credit accounts work is this borrowed Atom has to remain in our credit account. And so there's a lot you can do in Mars. You can trade perps, you can buy and sell assets. And so what this is allowing us to do is play around with our borrowed Atom, but within the constraints of the Mars protocol. If we want to now take this Atom and go buy and go unbond the D Atom, the D Atom, then we need to take it outside of Mars. We need to take this back into our wallet. And so if that is the case, then we're going to check this button here, receive funds to wallet. And now you'll see that how much we can borrow has come down dramatically. Now we can only borrow a maximum of 31. And that's because you're removing these assets from your credit account. They no longer count towards your collateral, and you're opening up, like this debt position. And so, this would be too risky for me. What this position is saying is that we're borrowing Atom against BTC. So if Atom outperforms Bitcoin, we are taking on liquidation risk. That could be by either Bitcoin going down against Atom, or maybe Atom is going up a bunch really quickly. And so if you think, okay, that's like a low risk, I think Bitcoin will outperform alts, whatever, then maybe you're more comfortable with higher leverage. But for me, maybe I'll just do like 50% here. And you can see that my health is still relatively healthy. You can see the new balance here. Total debt would be $15 against my $40 of collateral. I'll be paying 13% APY to borrow this Atom. And let's go ahead and borrow it. Okay, sign my transaction. Here it is. We borrowed about, 5 atoms. So now we can go check our wallet. Here, this is the easiest way to show you guys. Here's our atom. Okay, here's our 5 atom. I think I had a little bit of dust left over. So now our atom appears in our wallet. And here we go. We could just, directly buy our 5 atom is going to 4.18 D atom. And so how you track how profitable this is for you, you go directly to the liquid staking provider. Here is drop.money. And we go to unstake. So we're going to unstake D atom. And where am I? How much did we have? And it's always good to, simulate how much you're going to receive before you sign any transactions. So 4.18, I'm going to copy this number, put it here. Cool, 5.11 atom. So we started with 5.05 and we're getting 5.11. So that's 0.05 atom as profits, 16 cents. It's actually not looking that great right now. And so, maybe that means that the peg strength of D atom has actually improved. I didn't check it right before I said that. It was not doing well before today. And so, yeah, actually it's come down quite a bit. Now the peg is, right around the staking. It's right around the staking rate. And so, yeah, I would not recommend this strategy right now. Like, yes, you would profit 16 cents in 24 days. But if you do that math, 16 cents in 24 days is probably about the same rate as just staking it normally. And remember, in our Mars position, we have to pay 13% to borrow this atom. And so literally right this second, this is not profitable. But if you want to track the peg strength of liquid state tokens, there is a bot in the Neutron Telegram app. It's called Newt the Sniper, and if you ask it /arb, it will tell you what the current redemption rates are for the liquid stake tokens for drop. It'll tell you what the current discounts are, and it'll also show you a chart over time of the discount on those liquid stake tokens. And so this lets you track these. You can even get notifications. So if you see a big D peg, then you go ahead and you can do what we just did and see that difference increase. And so these are, again, just like all tools to keep in your toolkit for when these opportunities arise, because they don't always last a long time. I'm looking at the chart right now, and from October 11th, when we had that massive flush, the DPEG went all the way up to about 6%, and it stayed around 3% for a few days. And so if it was 3%, that isn't an annualized APR of like 40% APR. And so that would have been a perfect time to do exactly this strategy. Okay. Let me go back to the comments. Okay, it says Mersha is telling me that there is a 1.19% DPEG, so an APR of 19%. Yeah, so an APR of 19%, but then we have to take away the cost it costs us for borrowing. It costs for borrowing the atom to perform this ARB in the first place, which is like 12% right now. So you're only really profiting 7%. So again, that's up to you to decide if you want to push that many buttons for 7% APR. And also, we were looking at the swap rate on Astroport, and so maybe if we go look at with this rate on Astroport, if we look at skip, maybe that'll give us something different. Atom on Neutron for the atom on Neutron. Let's connect our wallet. Okay, 4.21. Oh yeah, like we're getting a slightly better rate using skip than Astroport. And so you would just go ahead and copy this number. Okay, so yeah, now it becomes slightly more profitable, but again, probably in the range of you'd be earning 10 to 15% APR on that side of the strategy, in addition to the wrapped Bitcoin side of your strategy. So yeah, just something to keep in mind. Thanks for bringing that up, Marsha. Okay, so I will open it up for any questions. We're a little bit over the hour right now, and while you guys think, if you have any questions, I do want to say that we are looking for a few testers for a automated arbitrage Telegram bot. If you're interested in arbing, basically similar to the strategy that I just saw, except you have to want to hold Atom. So you would be depositing Atom or Neutron into this arbitrage bot, and it will automatically look for arbitrages to perform and buy liquid state tokens at a DPEG, unbond them, and just automatically work without you. And so if you're interested in testing this, please send me a message on Telegram or on Twitter, and I can add you to the group, and you can help develop this tool for everyone else. So another thing I do every single week is I mint a Galactic Quark NFT on Supervault. So let's go ahead and do that, and then we will close the stream. I hope you guys learned a lot here about the different strategies for Bitcoin Summer, like what maxBTC is. We went over where the yield comes from, how it performed during the market volatility. We went over Supervaults versus Astroport and how their market making strategies are different and how the reward breakdowns are different. And we went into a few different strategies on how to use wrapped Bitcoin lending as a part of the Bitcoin Summer campaign, different strategies for how to profit from it, depending on what direction you think Bitcoin is, and if you want to use leverage. So if you had fun during this class, if you learned anything, please show up next week at 2 p.m. UTC. It's every Wednesday, and I look forward to the next class with you guys. If you have any questions about DeFi in general, about anything, feel free to message me. I'm always down to strategize with different people. Give YieldLab a follow. Thank you for hosting this every week. YieldLab is the platform for learning, and they'll be putting out a bunch of educational content and building a community around learning DeFi. I know it's complex, but we're going to do it together. So here's our Galactic Quark that we just minted, and we're going to raffle it off to someone in the audience who showed up and participated. So thanks again, guys, for coming. I'll check the questions one last time, and then we will close it out. Cute Cult, thank you. Okay, so Cute Cult is another NFT collection on Neutron. I will show their platform here. If you go to Mint, you can see here the Cute Cult Cabal is another minting project on Neutron, and they are 90% close to mint. They pointed out in the comments, thank you for coming, that the Galactic Quark mint is actually ending on November 1st or Halloween. And so if you are interested in minting any more of these NFTs, any of the Galactic Quark NFTs, go ahead and mint that before the session ends, before the mint closes. So thanks everyone for coming, and I'll see you next week.